Yes, students, now we will revise the last topic in income tax, that is the computation of total income and tax liability along with the alternate minimum tax provisions. I will discuss the questions on total income and tax liability and upload a separate video on it. In this video, we'll just focus on the format and steps to be followed for the computation of total income and tax liability. Along with, I will also tell you few points to be kept in mind while computing or while solving the questions on total income and tax liability, guys. And once we are done with this, we will also discuss a special provision called alternate minimum tax. Chalo, let us begin. First, steps for computation of the total income and tax liability. We need to know the residential status of an associate, guys, which is given in section 6. Because the income calculation or tax liability calculation sometimes depend on the residential status of a person. Especially the residential status of individual is very important. Then the income has to be classified under the respective head. Totally, there are 5 heads of income. The classification is given in section 14, whereas the heads of income will start from 15, guys. So I have given you the format to compute the total income. Guys, there are totally 5 heads of income and 2 more topics, that is clubbing, losses, and also deductions. I will not be explaining all this concept in detail now because we already covered it. Now I will just give you a overview of it and few things to take care while computing total income and tax liability. Okay, first, the first head of income is income from salary. Section 15 to 17 contains the provisions with respect to salary, and 15 being a charging section specifies anything which employee received from his employer under employer-employee relationship is taxable under this head on due basis or receipt basis, whichever is earlier, guys. So anything which employee gets from employer for working for him under the employment contract will be taxable in the hands of employee under the head salary. Okay. Then income from house property is covered in section 22 to 27, and section 22 being a charging section specifies the annual value of a property of which the assessee is the owner is taxable under this head. And here property means the building or the land which is appertinent thereto for the building. Okay, and normally what they are considering here is the legal ownership, but there are few exceptions where even though the assessee is not the legal owner, he is deemed to be the owner as per section 27, and the rental income of the property will be taxable in his hands under the head house property. That is as per section 27, guys. Okay. Then profits and gains of business or profession provisions are contained in section 28 to 44D. 28 being a charging section will tell the profit or gains which is earned by an associate from carrying on the business at any time during the previous year, and here business includes profession also, will be taxable under the head PGBP. And for this purpose, the assessee has to follow the income tax provision along with ICDS if he is following the mercantile system of accounting for income tax purpose. Okay. Then, if by chance, if assessee cannot follow what is allowed or what is not allowed, that is the expenses which are allowed as well as disallowed, then he has an option to follow presumptive schemes which are given in section 44 AD for business, ADA for profession, and 44 AE is for the assessee who is engaged in goods carriage business, where he need not worry about, or he or she did not worry about what expenses are allowed or what expenses are not allowed. They can just take their gross receipts or the turnover from the business and apply a certain percentage as per the respective section, which will be considered as presumptive income. And if they are disclosing the presumptive income as their business income or professional income, they need not even maintain the books of accounts and get it audited, guys. Okay. Next, coming to capital gains, which is a fourth head of income, section 45 to 55A contains the provisions with respect to capital gains. 45 being a charging section will tell the gains on the transfer of capital asset during the previous year will be taxable under the head capital gains. This is a general rule, but there are few exceptions where the transfer would have taken place in 1 year, but it will be taxable in some other year, like insurance compensation received or compensation received on compulsory acquisition, or if capital asset is converted into stock, it will be taxable in the year in which stock is sold. Got it? Normally, capital gains will be taxable in the year of transfer, but there are 3 exceptions for it, guys. Okay, sir. Then income from other sources is covered in section 56 to 59. Any income which is not covered under the first four head will be taxable under the head other sources. It is like a residuary head. But section 56 subsection 2 lists on few incomes which are specifically taxable under the head other sources. But please be careful, it is not an end list. Anything else also can be covered under the head other sources. And especially the gift taxation provision covered in section 56 to 10 is very important under the head other sources, guys. Okay. And whenever assessee is supposed to pay tax on someone else's income, like spouse or minor children's income, clubbing will always be attracted under the head income from other sources for the assessee, guys. If at all, if it is getting attracted. Okay. And clubbing provisions are covered in section 60 to 65. Then coming to set off and carry forward of losses, the provisions with respect to this is covered in section 70 to 80. Guys, I have just given here. Doesn't mean that you will always adjust the loss at the end. No, no, no. So we need to see whether the loss is current year loss or carry forward loss. If it is a current year loss, we will have two options. That is, in the same year, you can adjust it within the same head. If not possible, you can adjust it against other rates, subject to certain exceptions. If both is not possible in the current year because the assessee doesn't have income, then he can carry forward that loss for next 8 years or 4 years or for indefinite period, depending upon the nature of loss. And once the assessee carry forward the loss, he can adjust it only within the same head in the subsequent years, guys. The option of adjusting against other heads of income is not there for carry forward loss. And again, I'm telling you, for adjusting the loss, there are few exceptions. For example, specified business loss can be adjusted only against specified business income. Speculation business loss can be adjusted only against speculation business income. Long-term loss can be adjusted only against long-term gain. And the loss from activity of owning and maintaining resources can be adjusted only against the same income. Yes. Same way, if there is any loss from short term, that is short term capital loss, it can be either adjusted against short term gain or long term gain, guys. Got it? Yes. Once we do all this adjustment, we derive a figure called gross total income. And from gross total income, assessee can claim Chapter 6A deductions from Section ATC to ATU. And most of them are blocked under the default scheme, except ATCCD subsection 2, ATCCH subsection 2, and ATJJAA. Okay. And assessee can also claim deduction under Section 10AA against gross total income for export profit of SEZ unit. And even that is not available for an assessee who is following default scheme, guys. Okay, sir. Then, once the assessee claimed deductions under Chapter 6A as well as 10AA, both we have discussed in deductions chapter, we derive a total income or taxable income figure which has to be rounded off to nearest to 10 rupees as per Section 288A. And we are supposed to calculate tax on it. And whenever we are calculating tax on total income, first check whether total income includes any special income, guys. If yes, calculate the tax on special income first at a special rate, which is given under the respective section of Income Tax Act, like 111A or 112, 112A or 115BB, BBJ, like that. Okay. Then the remaining or balance income will be taxable at a normal rate as applicable to the assessee as per the scheme chosen by them. That is either optional or default. Okay, sir. Then few points to keep in mind while computing or while solving the questions on total income and tax liability, guys. This especially have to be very careful because most of them will be an hidden adjustments in the question, guys. Okay. So I have just noted down few things here. So we'll let us read one by one. First one. If salary received or salary earned per month is given or even pension per month, standard deduction of 50,000 or 75,000 under section 16(1)(a) has to be provided, guys. When you are computing total income question and all, if salary per month or pension per month or salary received is given, please provide a standard deduction under section 16 to compute income from salary, guys. If assessee is following optional scheme, then provide for standard deduction of 50,000, or if he or she is following default regime, then a standard deduction of 75,000 would be provided, even if question is silent. Sir, what about other exemptions and all? Guys, if question is silent, we cannot decide on HRA exemption or any other exemption under salary head. Got it. Even the deductions with respect to entertainment allowance or professional tax, if question is silent, we will ignore it. Okay. And please be careful. If employee has retired and if he is receiving pension income, it will be taxable in the hands of employer under the head salary. But if by chance, if employee has died and if family members are receiving the family pension, it will be taxable in the hands of family member under the head other sources. And for that, there is no deduction of 50,000 or 75,000. Please be careful. This deduction is only for the assessee who has salary income. So if in case, if the family member is receiving a family pension, that income is taxable under the head other sources. And in that case, 1/3 of such pension or 15,000, whichever is lower is allowed as deduction if that family member is following optional scheme. If the family member who is receiving the pension is following default scheme, then 1/3 of the pension received or 25,000 per annum will be allowed as deduction, guys. Under which head? Other sources. Okay. Next, second one. If rent received or rental income is given, then standard deduction of 30% under section 24A has to be provided. That is 30% of NAV. Guys, if by chance assume only rent is given in the question or monthly rent is given, then straight away take that as a GAV. And if question is silent about municipal tax paid or interest on housing loan and all, you can ignore it. But provide for 30% standard deduction under section 24A, guys, even if question is silent. Even if question is silent. Got it? Yes, sir. So if question is specifying only about the actual rent or monthly rent, straight away take that as a GAV. And if question is silent about municipal tax, then GAV will become NAV and give 30% of NAV as a standard deduction under section 24A. Remaining will be the income from house property, guys. And if in case in the question, if already income from salary or income from house property is given, straight away take it. In bracket, sometimes they would have already mentioned computed. So should I provide for these deductions? No. If it is already a computed figure, everything is already taken care, just copy down and place it under the respective head while computing total income, guys. That's all. Okay. Even if they have given taxable salary or taxable income from house property, it means it is a computed figure, guys. Okay. Next, in the question, if age and residential status of an individual is given, guys, that will play a role in your answer. While solving the question or when you are writing the solution, please be careful with it. Normally, the age and residential status will be given in the first line of the question. When they have given the age, especially when it is 60 or more, or when they have given that an individual is a resident, please take care of it until you complete your answer, guys, because somewhere it will play a role. Clear? Yes, sir. Then restrictions and maximum limit with respect to deductions. And for most of the deductions under chapter 6A or any other deductions also, there will be a maximum limit, guys. So please take care of it because normally they will test you on that. They will give the amount more than that, but you have to restrict it. For example, under section 80C, what is the maximum deduction which is allowed? 1,50,000. Whereas under section 80D, maximum is 25,000 or 50,000. Correct? Yes. So please be careful with respect to the maximum limit, guys. Then you should also know the list of exemptions and deductions which are not allowed under default scheme under section 115 BAC, guys, which we have covered at the end of the respective chapter. So you should be aware because when they're asking you to calculate the total income and tax liability under the default regime, they would have given few exemptions or deductions which are not available. So you have to take care of it. Means in your calculations, you should not give that exemption or deduction, but just give a note for it. Just give a note for it, guys. And if by chance, assume the question is on total income or tax liability, but question is silent about which scheme to be followed. Sir, what scheme should I follow to solve the question, sir? Default scheme. If by chance, if question is silent about default or optional scheme, go with default scheme. Majority of the times they will give it in the question or they will ask you to calculate under both, or even when they ask you to compute the tax liability of an assessee in the most beneficial way, you have to do under both the schemes and tell whichever is lower, no, wherever the tax liability is lower, suggest that as the most beneficial scheme, guys. So they can ask the calculation under default scheme or under optional scheme or both. Especially if they have asked under both, it will take too much time. So I will suggest you to take such kind of question little later, guys. First try to solve other questions, then go for that. And total income question will be asked under compulsory section in descriptive type. That is how the trend is in the past exams. And it will normally take more time, guys. It will be little lengthy. So after reading the questions in the first 15 minutes, that is from 1:45 to 2 p.m., plan accordingly. Which question will you answer first? Which question will you answer second, third, like that? And which question will you take it as a choice? Because under descriptive type, you will have one choice, guys. Okay, let me continue with this. Whether the total income includes any special income taxable at special rate. If yes, first calculate tax on special income, then tax on the normal income or balance income, then add up both. We will get gross tax liability. Okay. Then if the tax liability has to be calculated for a resident individual, then please be careful with the rebate, because rebate will be available for a resident individual under optional scheme if the total income is up to 5 lakh. That is actual tax liability or 12,500, whichever is lower. Whereas if resident individual is following default scheme, they will be eligible for a rebate if the total income is up to 12 lakh. Of how much? Actual tax liability or 60,000, whichever is lower. And especially here, rebate is not available under section 87A for an assessee who is following default regime against tax on special income, any special income. Whereas under optional scheme, it is not available only against 112A tax, guys. Please be careful with it. And there is one more additional point with respect to default scheme. For a resident individual who is following default scheme, if the total income is marginally more than 12 lakh, still they are eligible for rebate. So we need to calculate the rebate by applying S steps, guys, which we already discussed along with a question in tax rate chapter. Oh, then point number 8, applicability of surcharge if the total income exceeds a specified limit of like 50 lakh, 1 crore, 2 crore, 5 crore or 10 crore, guys. So whenever you are calculating the tax liability, if the total income is more than 50 lakh, 1 crore, 2 crore, 5 crore or 10 crore and all, please take care of surcharge, guys. So just pause for a second, check the availability of rebate or check the applicability of surcharge, guys, when you are computing the tax liability. Because when question is on rebate or surcharge, they will not mention in the question that please take care of rebate, please take care of surcharge. No. You need to apply when it is available, guys, or when it is applicable. Last point is applicability of marginal relief if the total income is marginally more than specified limit for the applicability of surcharge. So if the total income is more than the marginally more than the specified limit for applicability of surcharge, then we should also take care of marginal relief. So this concepts we already discussed in the tax rates chapter in detail, guys. Okay. So these are all the points which you need to take care while solving the questions on total income and tax liability, guys. If required, you can just mark this video and watch it on the exam day also, guys, so that you will not commit some silly mistakes while solving the questions. Yes, now we will learn the topic of alternate minimum tax, which I call it as a special provision. So that is why I have included it in a separate chapter in my material, that is chapter 10, guys. So whatever we have learned till the previous chapter is called normal provision, whereas whatever we are learning now is called special provisions, guys. Is it applicable for everyone? No. First of all, we will understand for whom it is applicable. Then once we understand for whom it is applicable, we will see how to calculate the alternate minimum tax, guys. In short, we call it as AMT. Okay, fine. Let us get into it. The provisions of AMT shall apply to all person other than a company who has claimed deduction under any of this category, guys. Not all three, any of it. So what is it? First, the list is under Part C or Heading C of Chapter 6A deductions, which we call it as income-based deductions, under Section 80 IA, IAB, IAC, IB, IBA, IE, JJA, JJAA, LA, M, PA, QQB, and RRB, but except ATP. Even ATP is a part of Part C of Chapter 6A, but if an assessee has claimed deduction under Section ATP, but in that case, AMT will not be applicable. Whereas, if assessee has claimed deduction under any of these sections, AMT will be applicable. Means along with normal provisions, we should also apply AMT provisions. Okay. Second point is Section 35 AD, that is for capital expenditure of specified business other than land, goodwill, and financial instruments. Then the last one is under Section 10 AA, that is with respect to export profit of SEZ unit, guys. I repeat once again, if an assessee is other than company who has claimed any of this deduction, not all, any of this deduction, then AMT provision is applicable. And when AMT provision is applicable, we need to do two calculations per year. That is one calculation as per the normal provisions, whatever you already learned. That is the total income and tax liability. The other one is as per AMT. As per AMT, which we are learning now. Okay. So how is the calculation? I have given the format here. You need to stick to this format, guys. Step 1 is all about whatever we already learned, nothing new. Step 1, compute the total income as per the normal provisions of the Act. Yes. And as per normal provisions of the Act means under optional scheme, guys. Because if an assessee is following default scheme, then AMT provision is not at all applicable. Okay. So as per the normal provisions means under the optional scheme, compute the total income as we have learned previously. Then on that, whatever is the tax rate applicable, calculate the tax liability. And if by chance, if this includes any special income, first calculate tax on special income at special rate as per the respective section. Then tax on the balance income at normal rate. So you will get gross tax liability, take it. And if total income is more than the specified limit of like 50 lakh, 1 crore, 2 crore, 5 crore or 10 crore and all, then 10 crore and all will not come for individual anyway. 50 lakh, 1 crore, 2 crore, 5 crore you can consider. Yes. Then you will add surcharge also here at the respective rate. Then health and education cess will always be there at 4%. We will get tax liability under the normal provisions. This is what we have already learned, guys. Okay, keep it aside. Let us denote it by A. Step 2 and step 3 is important, which we need to take down. Okay, which we need to be careful. Okay, you need not take down anything, just listen. So whatever total income is calculated as per normal provision, we are taking that as a base year. We are taking that as a base year. Okay. Then we need to make necessary adjustments. What is that adjustment, sir? Guys, assessee has claimed any of this deduction, no, because of which AMT is applicable. So whatever deduction he has already claimed while computing the total income as per normal provision, because of which AMT is applicable, add back that deduction. Assessee has already claimed this deduction as per normal provision, because of which only AMT is applicable. No, yes, add back that deduction. Add back that deduction. All three may not be there. Whichever deduction assessee has claimed out of these three, add it back. Sir, what if assessee has claimed two deduction? Add back both also. Sir, what if assessee has claimed only one? Add back only one. Okay. So this figure has come down because of this deduction. Yes, now we are adding it back. Deduction claimed under Part C of Chapter 6A except ATP. Okay. Then deduction under Section 10AA with respect to export profit. If at all, if deduction is already claimed, add it back. Then the last one. This is important. Deduction under Section 35 AD as reduced by depreciation allowable under Section 32. As if no deduction under Section 35 AD was allowed in respect of that asset. Okay, this adjustment I will explain you with some question. Don't worry. Okay, so we need to add it. Then we derive a figure called adjusted total income. Adjusted total income. On this, the AMT rate is always fixed at 18.5%. Whether the assessee has special income or normal income, it doesn't matter. Who is the assessee also doesn't matter. Obviously, other than company, but what is the rate applicable for them, which we have learned in tax rates chapter and all doesn't matter. Here, the AMT rate is fixed at 18.5%. Okay. And if adjusted total income is more than the specified limit for surcharge applicability like 50 lakh, 1 crore, 2 crore and all, here we need to add surcharge. What is the rate of surcharge, sir? Same. Whatever we already learned in tax rate chapter, same. But here for applicability, we need to check whether adjusted total income is more than the threshold limits, guys. Threshold limits of 50 lakh, 1 crore, 2 crore, 5 crore like that. Okay. So if yes, then accordingly add the surcharge at the respective rate. Then add health and education cess at 4%. And if surcharge is applicable, take the aggregate of both. Then calculate 4% on that. Okay, sir. Then we are getting the tax liability under section 115 JC, which we call it as alternate minimum tax. Let us keep it aside. Let us denote it by B. Now compare both, guys. Compare A or B. Whichever is the higher is the tax liability of an assessee, guys. Higher of A or B is the tax to be paid by the assessee. Got it? And if AMT, that is if B is more than A, to the extent of difference, assessee will get AMT credit. AMT credit, which I have mentioned here. B minus A. Only if B is more than A, you will get a credit. And what will he do with this credit is, he can carry forward it to next 15 years. And in next 15 years, whenever the tax as per normal provision is more than AMT, To the extent of difference, he can adjust the credit. To the extent of the difference, he can adjust the credit. Okay, I will take care of the AMT credit later. First, let me explain this calculation with an example, guys. So assume the total income of a partnership firm as per the normal provisions of the Act is 20 lakh after claiming deduction of 30 lakhs under section 3580, that is for capital expenditure of specified business. And let us assume that this 30 lakh is for building, guys. Building. Okay. So 20 lakh is the total income as per normal provision. Okay. Tax on that, as it is a partnership firm, it is a flat 30%. Okay. Yes. So on 20 lakh, 30%, 6 lakh. And as total income is less than 1 crore, there is no surcharge for partnership firm. Okay. So add health and education cess at 4% on 6 lakh 24,000. So the tax liability of a partnership firm under normal provision is 6 lakh 24,000, guys. Got it? And here I have taken an example of partnership firm. Please be careful. AMT is applicable to anyone other than company who is claiming any of the three deductions. It can be partnership firm, it can be cooperative society, it can be individual, HUF, EOP, BOI, anyone, guys. Got it? Yes. And especially if it is an individual HUF and all, then please be careful. You need to apply slab rates here. And if at all, if total income includes any special income, then calculate tax on special income first. Then for that, you add tax on the remaining income at normal rate. Okay, let me continue with this. So step 2, as assessee has claimed deduction under section 3580, is AMT applicable? Yes. So accordingly apply step 2. If in case, if assessee has not claimed this deduction, then I will stop it here only and pay 6,24,000. That is the final amount. No AMT, nothing. As assessee has claimed 30 lakh deduction under 3580, we know that AMT is applicable. So you need to identify in the question when AMT is applicable, depending upon the information given in the question, guys. Okay. So they would have given int in the question about any of these three deductions. If assessee has claimed any of these three deductions, you should know. You should apply AMT provision. If at all, if assessee is following optional scheme, guys. Okay. Sure. So second step, total income as per normal provision, I am taking it as a base. Okay. Then for that, whatever deduction under section 3580 is claimed, I need to add but from this. Guys, see, if assessee has claimed deduction under section 3580 for capital expenditure, for the same asset, he cannot claim depreciation under section 32. Correct? No, we have learnt it in PGBP. Now they are asking you to add back 30 lakh. But if you add back full 30 lakh, it is a loss to the assessee, no? Yes. So what should I do is from 30 lakh, if 35 AD deduction was not allowed, assessee would have at least claimed depreciation on this 30 lakh, no? As per section 32. Yes. How much is that you calculate? As I told you, it is 3 lakh on, 30 lakh cost on building. We will reduce 10% depreciation on it. So on 30 lakh, 10% depreciation comes to 3 lakh. We are not allowing depreciation, but if 35 AD deduction was not claimed by the assessee on this 30 lakh, you would have at least claimed depreciation on this 30 lakh under section 32 now. Yes. How much is that you calculate and reduce it from the actual capital expenditure. Remaining you need to add. Remaining you need to add. This is as if depreciation was allowed, how much is that you calculate and reduce it from actual capital expenditure. Only the remaining amount we will add it here. Got it? Yes, sir. So then we derive adjusted total income. On that, the rate is fixed at 18.5%, that is AMT rate. We will calculate, we will get 8,69,500, guys. And surcharge is not applicable here because the adjusted total income is less than 1 crore. If adjusted total income was more than 1 crore, then we would have added surcharge here. Got it? Yes. So in the given case, no surcharge. So add health and education cess at 4% on 8,69,500. So you will get AMT payable, which we will denote it by B. So now compare A with B, whichever is higher has to be paid. So AMT is higher, 9,04,280. And the difference between B and A is allowed as AMT credit. In this example, it comes to 2,80,280, guys. That is AMT credit. Got it? And what do we do with this AMT credit? We will carry forward it to next 15 years. And whenever the tax as per normal provision is more than AMT, to the extent of difference, we can adjust the credit. Yes, sir. Fine, guys. So I will just show you if you want. I can just pause the video and go through it. This is a question on partnership firm, guys. Yes, we'll move forward. So at the end, I have given a tax credit or AMT credit as per section 115 JD. No, we will discuss more about it. Okay. When will the assessee get a credit is, that is AMT credit, when alternate minimum tax paid, which is more than tax liability as per normal provision. The difference you will get it as a credit. When can he adjust it? When tax as per normal provision or regular income tax is more than alternate minimum tax. And he can carry forward this credit for next 15 years. Assume I have got the credit in the current year, I can carry forward it to the next 15 years. And 15 years will not be a year in which I have got a credit. So the year in which I have got a credit will not be counted in 15 years. It is from next 15 years, guys. Okay. And after adjusting the credit, whatever the final tax is paid by the assessee, it should never be less than alternate minimum tax. So even after adjusting the credit, whatever tax the assessee is paying to the government can never be less than this, because the name itself is telling minimum, alternate minimum tax. Got it? So in simple, if I have to tell what is the amount which an assessee can set off as AMT credit is, the credit available or the difference between the tax as per normal provisions and AMT, whichever is lower. Whichever is lower. I repeat. What is the amount of AMT credit which an assessee can set off in any year is the amount of credit available or the difference between the tax as per normal provisions and AMT tax, whichever is lower, guys. I will try to explain this with number of examples. Okay, I have taken various scenarios here, guys, for number of years, one by one. Quickly be attentive, I will discuss it quickly. So for assessment year 25-26, tax on total income, which is nothing but normal provisions. Okay, this I will just write it. This is as per normal provisions. Okay, yes, is 10 lakh, whereas AMT is 8 lakh. So whichever is higher has to be paid by the assessee, 10 lakh. And it is a tax as per normal provision. Will he get any credit? No, sorry, no credit. He has to pay 10 lakh. Okay, sir. Next year, 26-27, tax as per normal provision is 12 lakh, whereas AMT is 15 lakh. Whichever is higher, he has to pay 15 lakh. And 15 lakh he has to pay, he will get a credit of 3 lakh. That is the difference between these two. He will get a credit of 3 lakh. Okay, sir. Next year, tax as per normal provision is 14 lakh, whereas AMT is 16 lakh. Whichever is higher has to be paid, which is 16 lakh, pays full 16 lakh, and he will get 2 more lakh credit. He already had 3 lakh credit. Now, the difference between this, as AMT is more than tax as per normal provision, you will get another 2 lakh. So it is 3 plus 2, guys. Oh. Next, tax as per normal provision is 15 lakh, whereas AMT is 12 lakh. So whichever is higher is 15 lakh. Should he pay fully? No, no. As tax as per normal provision is more than AMT, to the extent of difference, he can adjust the credit. So how much credit he has? 5 lakh. But can he adjust it fully? No. So 5 lakh or 3 lakh, whichever is lower, guys. 3 lakh. So 15 lakh minus 3 lakh credit, remaining 12 lakh he has to pay. Just ensure that after adjusting the credit, whatever tax has to be paid, no, this can never be less than AMT, guys. It can never be less than AMT. So that means he has a remaining credit of 2 lakh. And if you ask me that, sir, this 3 lakh is adjusted from this year 2 lakh or this year 3 lakh, it should always be on FIFO basis, guys. So first I have adjusted this 3 lakh. So whatever remaining 2 lakh is there, no, that is the credit which we received in this year. Got it? Yes. Always adjust the AMT credit in the order in which you got it. Okay, because there is a 15 years life for it. Next year. So tax as per normal provision is 20 lakh, AMT is 16 lakh. So whichever is higher is 20 lakh, but should I pay it fully? No. We have a credit of 2 lakh. So I have a credit of 2 lakh. The difference between the tax as per normal provision and AMT is 4 lakh. Whichever is lower, I can adjust it, which is 2 lakh. So from 20 lakh reduce 2 lakh, remaining 18 lakh has to be paid, guys. Now I don't have any credit. Everything is exhausted. Okay. Next year. Tax as per normal provision is 22 lakh. AMT is 20 lakh. Whichever is higher is 22 lakh. I can adjust the credit, but I don't have the credit. I don't have the credit. So pay entire 22 lakh. And this year also I will not get any credit because tax as per normal provision is more. Okay. Then the last case, tax as per normal provision is 22 lakh and AMT is 25 lakh, whichever is higher, 25 lakh, and pay 25 lakh because what you pay can never be less than this. Okay, sir. Then you will get a credit of 3 lakh. That is the difference between this because AMT is more than tax as per normal provisions, guys. Sir, will they ask a question on so many years adjustment? No, guys. I have just taken this example in order to explain you guys the concept of AMT credit and adjusting it. Clear? I don't think they will ask for so many years. Okay, let us move back. Yeah. So we are done with AMT credit. We have few notes here. Let us go through it. First one. Every person to which this section applies, that is AMT calculations, shall obtain a report before a specified date referred to in section 44AB from an accountant. Here accountant means chartered accountant in practice, certifying that adjusted total income and alternate minimum tax have been computed in accordance with the provisions of this chapter and furnish such report by that date. Guys, when alternate minimum tax provisions is applicable to the assessee, he himself cannot do that calculation. So appoint an expert, that is chartered accountant in practice, and obtain a report from him that all the calculations is done as per the income tax provisions covered in section 115 JC and JD. The chartered accountant has to certify and issue a report, and that report has to be submitted at 1 month prior to the due date of filing the income tax return. Guys, when audit is applicable under section 44AB, the due date to file income tax returns is 31st October of the assessment year, and the report of audit has to be submitted 1 month before that, that is on or before 30th September, guys. Got it? And one more thing, whenever B is more than A, we will deem that adjusted total income is a total income of an assessee. Adjusted total income is the total income of an assessee, guys. Okay, sir. Yeah, coming back to this. Second one, all other provisions of the act like advance tax, interest under section 234 ABC shall apply to the assessee who is liable to pay AMT. So if I'm liable to pay AMT, is whatever a part of normal provisions like advance tax, interest under section 234 ABC and all is applicable, sir? Yes, it is applicable. Yes, it is applicable. So if I am supposed to pay AMT, am I still liable to pay advance tax in 4 installments? Yes, guys. Okay. Next. AMT shall not apply to an individual or HUF or an association of person or a body of individuals or artificial juridical person. In simple, I call them as slab rate associate. If adjusted total income of such person does not exceed 20 lakh. Okay, this is an exception given, guys. So assume slab rate assessee, that is individual HUF, AOP and all, if they have claimed any of this deduction, but still whatever adjusted total income we are getting here is less than or equal to 20 lakh, guys. It is less than or equal to 20 lakh. In that case, AMT provision is not at all applicable, guys. That means such assessee has to pay tax as per normal provisions straight away. Guys, please be careful. This is only for slab rate assessee. This is only for slab rate assessee who has claimed any of this deduction. Still, even after adding it here, they are getting adjusted total income less than or equal to 20 lakh. In that case, they are telling AMT provisions is not applicable, which means the assessee has to pay tax as per normal provisions as the final tax. Whereas if it is a partnership firm or assume cooperative society, even though if their adjusted total income is less than 20 lakh, still AMT is applicable, huh? Yes, if they have claimed any of these deductions. Clear? Huh? So please be careful. Exception given here is only for slab rate assessee, guys. Okay. The last point is the one which is important. If the assessee is following the default scheme, that is individual, HUF, AOP, BOI, and artificial juridical person, if they are following the default scheme given under section 115 BAC, then AMT provision is not at all applicable, guys. And even if an assessee is a resident cooperative society who is following optional scheme given under section 115 BAD or BAE, even for them, provisions with respect to AMT will not be applicable, guys. Especially now, assume an individual HUF, AOP, BOI, or artificial juridical person is following default scheme under section 115 BAC, guys. For them, all these deductions are already blocked. When they cannot claim these deductions, there is no question of AMT, guys. Only one deduction which they can claim is 80 JJAA. If in case, assume an individual is following default scheme and if they have claimed deduction under section 80 JJAA for salary paid to new regular workman, is AMT applicable for them? No, not applicable. Got it? Whereas all other deductions which is given here, no, for applicability of AMT, all these are blocked under default regime, guys. Got it? Yes, sir. Fine. Hmm. One more important point. Now assume an associate was following optional scheme in the past and he had a AMT credit which he has carried forwarded it to the current year. But in the current year, he wants to follow default scheme. Can he carry forward this AMT credit and adjust it in the current year or in the subsequent year? No. Once the associate comes under the default scheme, he has to forget about AMT credit. Even though he has got this credit when he was under the optional scheme, now once he is coming to the default scheme, he has to forget about that AMT credit, guys. Got it? Yes, guys. So we are done with the income tax revision sessions, guys. So I have tried my best to cover all the topics possible in the short period of time, and I hope it was useful for you guys. And whatever time you have spent watching these classes or videos has added lot of value to you and your preparation. And if you have liked it, do like the video, do hype it, and also don't forget to share it with your friends, guys. Then coming to a quote, I have just given a quote here. Let me read it. Push yourself because no one else is going to do it for you. Guys, I cannot sit next to you and push you guys. Or your parents cannot sit next to you every day, every hour and push you. You guys has to do yourself. You just think about why did you take this course? Obviously with lot of dreams and with the aim of completing it. And just think about what you want to be in the future, where you want to be, and what are you doing today. Is it contributing anything for your future? If yes, then very good. If not, if you feel somewhere that you are wasting time on unnecessary things, guys, please improve on it. Try to change. And if you are a student who was not able to clear the exam in the past attempts, then just think about why you couldn't clear. There will definitely be a reason for it, no? And obviously the reason is you couldn't prepare properly. And if not now, when do you do it? Don't keep on taking the attempts, guys. Just make it that next exam should be your last attempt for intermediate. And give your best, you should be able to clear it. And in your preparation stage, I know it is difficult to sit for a long hours and study and watch the classes. Guys, just push yourself. I know it is difficult to sit for a long hours. Maybe in between 5-10 minutes you can take a break, but don't make it too long, guys. And during your break time, don't watch mobile phone or don't open the social media and all, because without even your knowledge, you will end up spending too much time on it. So please make sure that you will keep your day as productive as possible and prepare for your best, guys. Let the toughest question come in the exam. You should still be able to answer it. Don't blame that institute gave tough question or paper was tough or evaluation was tough. That is why I couldn't clear. Guys, you should know that you are doing the toughest course in India under the commerce stream. So obviously you have to be prepared for the best. And however tough the questions is or question paper is, you should still be able to get exemption in that paper. And I know you will get it. All the best, guys. Prepare well.